Gold's meteoric rise beyond 4,000 US dollars per ounce marks a watershed moment in global markets, driven by a confluence of US fiscal uncertainty, falling interest rates, and worldwide geopolitical tensions. This 50% surge from last year's $2,600 level has transformed gold into more than just a safe haven. It's become a barometer of global economic anxiety, with spot prices touching $3,990.85 and futures briefly exceeding $3,990.85 $4,014. The price surge stems from three key factors working in concert. First, the US government shutdown has undermined confidence in fiscal management, weakening the dollar and pushing investors toward tangible assets. Second, anticipated Federal Reserve rate cuts through 2026 have reduced the opportunity cost of holding gold, which typically becomes more attractive in low-interest environments. Third, geopolitical tensions from Ukraine to the Middle East have spurred both central banks and private investors to seek safety in gold, leading to unprecedented demand at facilities like the Perth Mint, where weekly customer numbers now exceed 7,000. For Australia, the world's second largest gold exporter, this price surge has profound implications. Gold is poised to overtake LNG as Australia's second most valuable export, with projected earnings of $60 billion this year, a $12 billion increase minus, while LNG earnings are expected to fall to approximately $54 billion. This shift represents a significant departure from the past 2 decades, where LNG and coal dominated Australia's export narrative. However, beneath this glittering surface lies a sobering reality about Australia's finite resources. Current estimates from Geoscience Australia suggest the nation has only 40 to 45 years of economically recoverable gold reserves at present extraction rates. Iron ore reserves extend slightly longer at 50 to 60 years, while copper resources could be depleted within 30 years. Even vast coal and gas reserves face uncertain futures due to climate policy constraints and declining global demand. The quality of new gold discoveries is deteriorating, with deposits becoming smaller, deeper, and more expensive to extract. This challenge is compounded by environmental concerns, as gold mining requires significant water resources and relies on cyanide-based processing chemicals, particularly problematic in water-stressed regions like Western Australia and Queensland. The current gold boom also masks structural vulnerabilities in Australia's resource economy. While export values are impressive, gold mining creates fewer jobs than traditional energy sectors like LNG or coal. This employment disparity means that high gold prices don't necessarily translate into broader economic benefits for mining communities or regional economies. Looking ahead, Australia faces critical strategic decisions about resource management. 3 key policy areas demand attention: economic diversification beyond the current concentration in iron ore, coal, gas, and gold, which currently account for roughly 70% of total export earnings. Investment in value-added processing rather than pure extraction, including downstream refining and battery-grade minerals, and the establishment of a dedicated resource transition fund to convert today's windfall into sustainable future development, following examples set by Norway and Chile. The global implications of gold's rally extend beyond mining. It reflects a broader loss of confidence in traditional financial instruments and government stability. For Australia, this has created a complex feedback loop, supporting the Australian dollar while attracting international investment capital through sovereign funds and ETFs. However, the Department of Industry warns that maintaining current production levels will require a 30% increase in exploration investment over the next decade. UBS analysts project gold prices could reach 4,200 US dollars and maintain that level through 2026, suggesting continued strong returns for Australia's gold sector. However, this short-term prosperity shouldn't obscure the longer-term challenges of resource depletion, environmental sustainability, and economic diversification. The critical question remains whether Australia will use this golden moment to build a more resilient economic future, or simply accelerate the extraction of finite resources until reserves are depleted and mines become too deep and costly to operate profitably.